Welcome to the morning show.
Morning, Surajeet, and let me start by saying great to be here on this show with you. I've known you for a long time. We've done multiple interviews, so good to be back over here again.
From a auto finance company to one of the largest NBFCs in the country, it's been a long journey. You have had the amazing run in the last few years, both in the stock market and in terms of financials. If you could briefly say now what's next for the next 2-3 years for you?
You're one person who has seen our journey at Bajaj Finance over the last now almost decade and a half. This journey started in 2007. As you correctly said, till then, Bajaj Finance, it was called Bajaj Auto Finance at that time, was primarily a captive financier for our motorcycles, scooters, three-wheelers of Bajaj Auto. Because when this company started in the late 80s, at that time, it was not common for banks and other NBFCs to do consumer loans. And that's why we started our own. Now, over the years, especially between 2000 and 2005 and 6, as India really started growing and the financial services space, as you know, in any country needs to grow at 2 to 3 times that of the real economy so that it supports the economy going forward. That's when we realized that we had this significant opportunity in the financial services space. And that's when I moved out of Bajaj Auto into my role at Bajaj Finserv, and one of our main companies, other than our 2 insurance companies, Bajaj Allianz, was Bajaj Auto Finance in those days. We were very clear from our early days that we wanted to build a diversified, tech-first lending business. Diversified because that's how you diversify the risk. That's how you balance your asset and liabilities. You balance high return, but seasonal businesses with lower return, longer duration businesses. And overall, you create a book that ends up being a solid long-term book so that you're able to raise funds, raise liabilities accordingly at competitive rates. We were also very clear that we would focus around the middle-class consumer. That is where the bulk of India lay. And of course, a few segments up, a few segments below, because that customer had a reasonably solid wallet size where if we established their credit early on, it gave us an opportunity to sell to them multiple products and solutions, thereby moving from a single transactional relation to a more 360-degree relationship with the customer. And if you have a continuous 360-degree relationship with the customer, as a lender, you are forced to ensure customer comes first in everything that you do. Because it's not one loan you're giving to the customer, you're going to be there multiple times. It also ensures that the customer sees you as someone important to them as part of their life cycle. And that's why the customer will stay true to you, will hopefully default last with you in their own relationship with you. And that's really the journey of Bajaj Finance over the last 14 years. It has been about systematically adding new products every couple of years, about building geographical capability. Initially, the first 50 cities, then the next 500 cities. Today, we are now in over 3,000 cities and towns around the country, of which over 75% is outside of the big cities. So very strong presence in rural India. And across these geographies or products, our focus continues to be to use data, to use analytics, to understand more and more about the customer so that we can understand what is the risk of the customer versus our own risk appetite. Now, when I look at the next 5 years, this world is going digital. It has already gone digital. There are some businesses which may be less digital, which are more hardcore manufacturing or services. But many businesses like us have not only a very significant digital opportunity, but if we don't get it right, we will have new players come in that will threaten what we are doing. The pandemic, in a way, enabled us to pause through the first lockdown, to reset what we were doing, reorganize our thoughts, and create a new strategy for the digital world. And over the last 2 years, that's what Bajaj Finance has now been focusing on implementing. And our new app what internally we call our 3-in-1 app, is a digital app which puts the customer right in front for a frictionless experience across our multiple products and services, and not only products that we make, like our loan products, but also investment products that we sell for others, payment products that we work with partners and we are building our own as well. And also protection products like insurance, which we sell for Bajaj Allianz and for a few other high quality partners as well. So it is about creating that next generation experience for customers, but it is also about creating it for partners. Because as I just talked about, we sell products for a number of partners. We work with over 100,000 real retail stores around the country. We work with large manufacturers of all kinds of products, from televisions to mobile phones to furniture to hospital chains and doctors. So integrating them into, again, a seamless experience of working with us is what this app aims to do. And finally, it is also about taking our employee engagement to the next level of integration. How can we make their work life easier, more productive? How can we make learning and training more seamless? A lot of it is self-learned. How can we make it more intuitive? The reason that you buy an iPhone compared to an Android phone is because it is so intuitive. It doesn't mean that it does everything, but what it does better than anybody else. And that's what our digital transformation aims to do. But what we do, we must do this better than anybody else. And that's why it's not a stationary target either. You will see us update our offerings year on year so that we at least have the chance to play in this very competitive space.
What would be the size of this? In terms of the customer base which you will really have once you do this, the kind of merchants and some idea of what is the kind of transactions that you will be able to do?
It's a very important question from a materiality point of view. Currently in Bajaj Finance, we have 50 million plus active customers that are credit tested, that are credit approved for multiple products. Almost half of these are digitally working with us to buy different products. And we are working with the other half as well to enable them to do that. Typically, if you see the 100,000 stores that we have over the coming years, each of these stores will interact with us end-to-end digitally. If you look at the number of partners that we have on our debt management side, on the collection side, we've again built a software for them so that as they interact with customers, it is done with a high level of compliance. It is done with the right information to the right customer so that the whole experience is as frictionless again as possible. So entire debt management services over the next year and a half will also go digital. So will our employees engage. So it is not that it's going to be a percentage of our business. By and large, our entire business in the coming years will be digitally enabled.
So you said you will have 50 million customers already. To begin with, say in the next 4 or 5 years, what is the kind of numbers that you're looking at?
Today, as I said, Bajaj Finance has 50 plus, about 52, 53 million credit tested full KYC customers. I believe outside of a few large banks, and even they would not have it digitally. We would probably be the largest ones to have it digitally. A lot of your payment companies who talk about a much larger customer base, but those are not credit tested KYC customers, fully KYC customers. We should be clear about that. In addition, currently itself, Bajaj Finance adds about 5 to 7 million new customers every year. So that will happen. We'll continue to accelerate on that. When I look at across our financial services group, when I take into account our insurance and other businesses as well, we are today close to 150 million customers. Of course, with the right amount of Chinese walls. In this, we've been working with our existing customers when they come for claims, when they come for new products, to ask them if they want to experience our products and services across what the group offers. And those that authorize and approve then become available as well for cross-sell. And hence, if I see in a 5-year period, there should be no reason why we should not be at 150, 200 million customers who we actively work with. Another important, I would say, area for us is payments. And currently, we have a number of initiatives. We have a prepaid license. Our own payment, I would say, gateway will be implemented over the next year or so. And what payments does is payments ends up becoming a very strong transactional glue for customers. Because, every day we are using now, whether it's Google Pay, whether it is XYZ Pay, and tomorrow we will use Bajaj Pay. And we will use that in the same way, whether you want to buy groceries, whether you're paying your restaurant bill, whether you're ordering something online. So the engagement is very high on a transaction basis using payment. But a payment platform by itself doesn't necessarily make much money, because for their engagement, you're not willing to pay any premium pricing, especially when there are multiple of them. So for somebody like us that already manufactures and sells loans, distributes insurance, investment products, where we make money in Bajaj Finance, adding payment becomes a natural extension to create that glue for the customer. But yet we then cross-sell them our products and solutions where we make money. So that is what distinguishes us from others. And if I were to broaden the argument to why should somebody like us get this 150, 200 million customers in the next 5 years, it would be one, using payments as a transaction glue. The second is on the investment side. So today, whether it's fixed deposits, whether it's mutual funds, whether it is other financial instruments, as we start selling more and more of these to the existing customers, it becomes a relationship glue. Because a person wants to come to the app or wants to come to the site to see what's their investment portfolio, how is it growing, engages with the team. So this becomes relationship glue. And then when you sell them your core products, whether that's a loan or whether that's, say, an insurance product, then you add the next glue, which is in our case, the business glue. So a combination of a transaction glue, a relationship glue, and a business glue is what creates for us a holistic set of offerings, which engages with the customer, keeps the customer relevant to us, and vice versa, and ensures that the customer gains from interacting and engaging more and more with us, and we gain from that experience as well.
You have relationships with a lot of retailers from whom we buy, whether our televisions or our consumer goods, basically. So would you have to build a pretty substantial e-commerce platform? And my second question is that if you are going to build an e-commerce platform, does it in any way conflict with the fact that you are one of the largest players, where you are a partner with other e-commerce players, where you are financing the needs of their customers?
The biggest difference why we end up working not only through our own platforms, but with most of the large platforms, is that we are an enabler. So we don't compete. We are not ourselves earning by selling the physical product. We are enabling, whether it's the digital platforms on which these products get sold, we're enabling real life stores to sell those products. We're enabling doctors to get closer to patients. We're enabling patients to get to hospitals through our new health solutions business. So we end up being a very strong enabler. Even today, we have an e-commerce platform where we have about 15,000 retailers that sell their products and services. And this currently is on our Finserv markets, wherein we end up enabling them by getting them customers, by providing loans and insurance to those customers. But we don't sell the products. So as a result, we are not competing with the retailer. The same would be true for the large e-commerce platforms. We don't sell the product, but we finance the customer. And that's why I see our enabler role as a very significant role, where we are collaborating to help sell the end product, and we are not competing.
A lot of the e-commerce players have also looked at, in order to increase stickiness, have also got into things like entertainment, music, as a glue to keep customers in. Would you, as a large player in this space, look at other clues beyond just the financial services clue?
Again, we have no plans to directly end up building businesses that sell those products. Our focus is on enabling that by building the platforms, by ensuring that, as you're saying, gaming is becoming a very significant business opportunity. But beyond that, look at the entire digital world, look at the metaverse, look at NFTs, look at digital art. We are closely monitoring these. We are ourselves trying to understand the space so that we can separate out between what is real and what is noise. Because what is real will still need financing, will still need insurance, will still need a platform to house it and store it. Blockchain comes in relevant over there as well for authentication. So these are all new spaces. And as we follow it as well, we will monitor and decide which of these to play the enabler role. Because some of them are going to become very real opportunities in the coming years. But if I were to even see today, while we've built a very diversified set of products and solutions in the lending and associated spaces, there are still areas that we need to build on. So, for example, later this year, we will launch an online store for two-wheelers and across multiple brands, but basically, again, financing our own customers. I don't think any of Bajaj Auto's competitors will let us sit in their showrooms. But our own 150 million customers that I said across our companies, why can't we give them a pre-approved two-wheeler loan? Why can't we give them an insurance policy with that? So this becomes a natural extension for us. We are also in the used four-wheeler space the last few years. As we build greater capability and size in this space, we will seriously evaluate, do we expand this to go into the new four-wheeler space. Again, looking at strategic collaborations there with some of the large four-wheeler majors. Some of them have been chatting with us to see whether we can do something together. So even within existing spaces on the consumer side, there are enough opportunities. We've also, in the last 7 or 8 years' time, become reasonable players both in the SME lending space and in the housing space. And we will continue to grow those also.
As you have experience in the auto sector, the electric vehicle sector is opening up and it has obviously new challenges of financing. Many of the EV players say that it is difficult to get finance and there are lots of issues which happen. How do you see this space panning out?
Very clearly, the EV space is an evolving space in India. But if you look at the EV space over the last decade, look at the first few years of Tesla. They were miserable failures. No production targets were met. Quality was an issue. Profitability was an issue. Building at scale was a big challenge. But over the last so many years, they are managing to get that right one by one. And as a result, today, the market cap of Tesla is more than all the other auto companies put together. Now, should it be or not is another question. I'm not going into that. But I believe that the EV space is here to stay. It may not be the only way towards clean energy, because we know at the back of electric is still very often thermal power plants. But at least it brings in cleaner environment into the bigger cities, which end up being more polluted. You may also see hydrogen, you may also see hybrids coming up. But overall, what we're talking about is a cleaner energy vehicle space. And we're seeing that after COP26, countries around the world are committed towards a cleaner climate going into the coming years. Once again, we think a lot more commitment needs to come from the developed countries that have developed on the back of polluting the rest of the world. They have a responsibility now to support the other countries to get to a level using clean energy sources. But again, that's another discussion. I believe countries like India have made their commitment towards EV and clean energy. And this will require significant amount of upgradation of infrastructure on the ground, from charging stations to swappable batteries, if that's possible, to setting up battery manufacturing facilities. Our entire Make in India and PLI schemes should help there as well. It will require innovation within India by the auto companies, and it will clearly require significant amount of financing and insurance for the entire supply chain, not just at the customer level, but for the entire supply chain. And this is an area where even at Bajaj Finance, but more particularly also at our insurance companies, we are doing a significant amount of work so that we prepare ourselves as this space starts evolving.
You have got into the whole mutual fund space, and you have also done a lot of innovation in the health space, and these seems to be two new areas. So just wanted to understand your entry to mutual funds. Why did you get in this space, which looks very crowded? Also, you are approaching the health space very differently from others. So if you could elaborate on how you're looking at these two businesses.
The mutual fund space is a very new space for us. We actually first applied for a license in 2011 when we got an in-principle license. But when we looked at the space, and even at that time it was quite crowded, we were very clear that we didn't want to be a me too. And that's why, as we were building our customer base across other businesses, we put that on hold. Now, with the very large number of customers that we have, we believe that we can create a set of unique offerings in the mutual fund space by looking at different customer segments, by not doing just a one-size-fit-all product, by looking at much lower costs than what the traditional industry is used to. And this is by leveraging technology, leveraging the digital space, which has evolved quite a bit in the last decade as well. I won't talk more about that at this stage, but as we start launching that business towards the end of the year, we'll talk more about how we want to differentiate ourselves and make products that are relevant to our own existing customers and naturally to the larger set of customers as well. The health solutions is a very interesting space. You know, we've been doing loans to doctors, to individuals, to patients for their medical requirements for many years. We've also been insuring them. Health insurance has been a very significant business for us, due to which we have our network of clinics, of hospitals around the country. And about 3 years ago, one day we said that, you know, let's look at this whole problem from the customer's point of view. So rather than looking at it inside out from a point of view of a lending company, from point of view of an insurance company, why don't we look at it as a customer, as a patient? And when I look at, or when we looked at it from that space, we realized how disorganized this entire sector was. If you're a young 30, 35-year-old couple, maybe with a kid or two, you are moving jobs, moving into another city, you don't know which doctor to go to. You don't know who's a good GP. You're not able to get appointments. You don't know which is a good quality lab. You don't get access to hospitals. You have to start your life all over again, your medical life. If you go to the doctor also, especially if you go to your GP, a good GP needs to know you for a few years to be able to clinically examine you, to be able to read through your medical history and guide you with what is the right solution for you. Maybe very often you have a cold. You always get a cold when the weather changes, like I do. So you don't need medication. You probably need a little bit of steam and cleaning for 2-3 days, and your allergy gets over. But if somebody doesn't know that, they will medicate you. And in India, we are used to getting over-medicated compared to other parts of the world. In addition, our GPs end up being so busy that when we did a survey, we realized that the average GP spends between 25 and 30 minutes with a patient in Singapore and the US. Whereas in India, it is 5 to 7 minutes. But 5 to 7 minutes, that person has to assess your problem, has to hear you out, has to ask you for your past history, and then prescribe you medication. So, and then if you go back again in 3 to 4 months, again, the same thing happens all over again. So we said, why don't we digitally organize this and create a health solutions platform, which we have launched, which is called Bajaj Finserv Health. On this platform, we are aggregating. So now in over 200 cities, we have aggregated almost 100,000 doctors, over 1,000, 1,100 hospitals. We want to take it to 5,000 hospitals. We are aggregating pharmacies. We are putting together clinics. We are putting together laboratories. And we are creating solutions, health solutions for a customer with loans and insurance built in. So, for example, we've got Arogya Care, our premier healthcare solution, which builds in linkages to the GP. You get access to the best GPs near you. You get X number for a particular price. You get X number of visits free for you and the family. You get discounts on your medicines. You get access to hospitals, and you get insurance built in and support on financing when required based on your credit. So you are converting what would have been disparate products and putting together a solution for customers, making their life easier. We've also created a patient management software for doctors, and over 10,000 doctors have implemented it, where patients' health records would be stored with patients' approval, their prescriptions will be stored, teleconsultation is available. We are doing now nearly 100,000 appointments a month, out of which more than half are teleconsultations. And all this data with patient approval becomes available to us, so that over a period of time, we can create customizable outcomes. So the whole idea is to create customizable, personalized, preventive and prepaid outcomes for individuals over a period of time. And that's what makes this a very interesting business.
You are considered to be a non-bank, but a bank in many ways, because you offer most of the services. So the question is, if the rules are such that you actually can get a banking license, does it really now, with the kind of size that you have and the kind of digitization that you're doing, does it really matter for you to raise funds in a bank? You have an advantage, or there are more regulatory hassles? How do you see this? Assuming that even the license rules are such that you can do it.
Conceptually, if you think of two circles, and one is a bank and one is a non-bank, and if you bring in an overlap, we represent probably the best of the overlap right now. So we do most of what a bank can do, and we do most of what an NBFC can do. But we do it in a robust, long-term, solid manner. So we have from day one implemented most of the regulations which are applicable to banks for ourselves. And that's why you saw even in our last quarter, even the new regulation on provisioning that RBI brought in, we took no hit because we were already following it on our own. We follow our own liquidity funds. We set some aside based on what our asset liability committee thinks is required. Even though as an NBFC, we don't have to keep something like a ratio that banks have to do. So we don't have a CRR requirement, but we keep one voluntarily. Our processes, internal processes, our operations processes, our compliance processes, our risk processes are more like a bank than a non-bank. And that's why when you look at our OPEX to revenue percentages also are similar to better than banks, but higher than non-banks. And this model has worked very well for us. We do evaluate every 3 to 4 years whether it makes more sense to become a bank if an RBI would approve it as well. But so far we have found that our current model helps us grow for the next 3 to 5 years. Digitization, and along with digitization, what's being called as decentralized finance is becoming more and more relevant around the world. And the more decentralized financing gets, the less a monolithic environment like a bank will be relevant for the future. But at the same time, there is certain solidity in being a bank currently because of regulation. The life window that RBI allows them, probably an infinite lease of life. Banks in India at least aren't allowed to fail. So from a customer point of view, at some point, is there greater confidence in a bank than a non-bank? This is clearly an open question. And it is something that we debate with as well. We are pleased with some of the recent announcements for new bank licenses that RBI came out with. And that will play again an important role in our decision-making process as and when we evaluate it in the future.
If you look at COVID, it obviously made everybody sort of relook at their businesses, and especially the consumer business and buying really got a hit, and therefore one would assume that it also had a hit on your business, your consumer business. Of course, that is over. What is the trend that you are seeing in terms of, because some people say that it's sort of growing, like you will now see huge amount of growth. Some people are saying, no, that hasn't happened. It is still a slow growth. I mean, you see the trend which is happening on the ground, because obviously, you see the kind of loans that people are taking for consumer finance. What is the trend that you are seeing in the ground?
Let me answer this in three parts. One, clearly, the pandemic and the first lockdown was a shock. It impacted lives, so it impacted people personally. It impacted livelihood. As a result, it impacted lenders like ourselves. And we reported higher losses than what we had in earlier years as a result of that also, as the country came to a standstill. It also impacted us in other areas. It impacted us because we were not able to work. We were all locked down. And as a result of that, new hybrid work models developed as well. It impacted us because, and when I say us, I mean overall industry also, because it made us realize that an event as large as that, which impacts every part of life, is possible. This is clearly that black swan event. And how do you plan for that in the future? How do you build the right nimbleness, the right capability into you, your people management, your people skills, into your processes, into how you deal with customers? Should this happen again? Because you could have multiple waves. We all hope that we are towards the end of this pandemic, but you can never be sure. So it impacted us in different ways. Now, coming to the current period, what we have seen over the last 3 quarters is that there are some very good months and then there are slower months. Clearly, there are segments which got impacted the worst in this pandemic. Anything which was contact-based, so restaurants, physical stores, travel, hospitality, hotels, also small businesses. Small businesses got impacted while between the government and the RBI, they played a very strong supportive role. Many of them came out of the first wave, but in the second wave, they went down. So anybody linked to those businesses is still facing some hard times. We have overall seen the last few months to be very strong, and assuming the pandemic continues to stay under control, we see the pre-COVID days clearly coming back in Bajaj Finance. What is also very important is that learnings from this as a way to running business, to running lives, how do people make personal choices going forward? This is going to be very important for businesses to choose. And different businesses that have different levels of digital adoptions will end up doing this differently. But we think this will be significant. It will not necessarily be going back to the lockdown days, but neither will it be going back to pre-COVID days. There will be a hybrid model that will evolve. And I think that hybrid model will focus primarily on building greater flexibility in the business model so that you're there for your customers and partners, and greater flexibility and choices for employees.
What kind of business comes from rural India for you?
A whole bunch of consumer loans. We do loans to small and medium businesses. So we would have over 10 different products in rural India as well.
So out of this 50 million KYC customers, how much would you have in rural today?
I would say currently approximately 8 to 10%.
Okay.
And that is something that is growing as well. Interestingly, over the years, through even the lockdowns, we have seen that the credit performance of our rural and semi-urban customers has been better than our urban customers. Even though urban, we are probably amongst the best in the country, but our rural has been even better. Now, this is both choosing the right customers, but also the right level of engagement, and also just shows their own ability to manage credit risk.
Coming back to your father, he was always considered to be the auto man of India. One has always talked to him about the automobile industry, two-wheelers. He had strong opinions about mobile, scooters, everything. And he was very open about it. But one didn't see him a lot of articulation about the finance business. So did he give you any advice on this and what to do? Or he said, no, you look after it. This is not my business.
My father was an auto man, but he had this uncanny ability. And a number of people in their memorial contributions to him mentioned that, who knew him well, to focus both on the big picture at 30,000 feet and grasp what the issue was, and simultaneously dive into the smallest of detail where he would tell you where you haven't crossed city or dotted an I. And while he wasn't an expert in the financial services business, that's where Nanu Pamnani helped us tremendously. But in all our reviews with my father, my team members used to come back tremendously energized and initially even surprised at how he had the ability to pick up the relevant questions and ask them that. So they had to be on their toes. They had to be prepared for those discussions. But also the advice that he gave. Of course, he would not tell you do this loan or that loan, because that was not what he was expected to. But the advice that he gave used to be very, very relevant. And a personal anecdote for me was, I think it was 2006, between 2006-07, when we were significantly evaluating demerging the financial services business. And as you know, my older brother Rajiv was firmly in the seat driving Bajaj Auto to newer heights. And I volunteered. I said that, let me move on to the financial services business. Let me build something. It existed already, but see what we can do, because India is providing this significant opportunity at this point of time. Economy is growing 8.5%, 9.5%. So let's do this. And after dinner, because we stayed together, we used to very often just stroll for a bit. And he was very candid. So he told me, he said that, so far, you were sitting in the back seat in Bajaj Auto. So while none of the credit came to you, neither did any of the blame or any of the failures come to you. He said, if you go to the financial services side, and this is something that's very new, but given your MBA, given your experience of the last decade in Bajaj Auto, he said, there's no reason why you should not be able to build this business up. But keep in mind that success and failure will be both on your watch. You will be responsible, and I leave it to you to decide to do it. And I told him right away, I said, this is what I want to do. And he told me, he said, I can't be more proud, because I hope that would be your answer. But as a father, and of course, as a chairman of the group and the businesses, I had to put the risks out in front of you as well. So as he was with anybody else, he was always very direct. He was always very black and white on what the opportunities, the risks were. But to me, he was always very, very supportive.
What are the things you learned from him in business, which you have replicated in what you do in Bajaj Finance, in your companies, etc. and all? What are those 2-3 things which you think really made that difference in looking at him? Maybe he didn't tell it to you directly, but you saw that he was doing this and you picked it up and said, this is the way I'm going to do my business too.
Yeah, so a few things. One, very clearly, as he walked the talk, was work hard, work with honesty, never compromise, give up the business, or don't get into a business, but never compromise on ethics and integrity. And third, which a lot of people find difficult to do, is speak your mind. Speak your mind also means speak your mind in a meeting. Today, across our companies, the youngest persons are asked to talk and speak their mind and give their view. Because that's how you build confidence. That's how you try new things. That's how you learn from failures. That's how you build your own success. So to me, these 3 things were really what his life stood for. Everybody who knows him, these things stood for that. But there were other things than that. One, he heard everyone. Of course, he loved talking. So everybody says that when Rahul Bajaj spoke, you had to listen. But he was a very good listener as well. When he heard a point of view which was stronger than his own, he was open to accepting that point of view. So to me, listening to others, and as distinct from him, I don't talk first. I listen first and then I talk. That listening to help you arrive at a better decision is also very important. And then once you're sure, don't wait for consensus. Be clear once you've heard everybody, you've seen the data, take that chance, go ahead and act. Because otherwise you can intellectually keep planning. But unless you execute, you can never move ahead. And be prepared that you will fail a few times. It doesn't matter, but it is important to keep moving. So these were some of there were a lot of lessons, but these were some of the clear, simple, basic ones, which I think apply to each and every one of us.
Thank you. Wonderful talking to you, Sanjiv, as usual. It was a pleasure.
Likewise.